Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. That's where you get everything you need to know in 90 seconds at 9 o'clock, with news of a new approach to affordable housing in Australia. But first, last week's initial unemployment benefits claim report in the US was a little higher than expected, taking it off its 44-year low from the previous week. US-based employers, however, announced 37,000 job cuts in February, down 19% from January and down an impressive 40% from the same month a year ago. Meanwhile, American household net worth rose $2 trillion in the December quarter, an impressive 6.3% higher than the same quarter of the previous year. Rising real estate values and rising stock markets were behind the rises. The same report showed that the growth of household debt eased a little in the quarter, and the same was true for businesses and government. Now all eyes are on tomorrow's non-farm payrolls report. The latest expectation is for a strong 200,000 rise. Across the Atlantic, the Eurozone is seeing sharply higher inflation, but that has not triggered any rate response from the ECB overnight. In fact, the only thing they raised was their growth forecast for the region. The QE is still in place, adding another €80 billion to their monthly liquidity, and that now totals more than $2.4 trillion since the start of their money printing. There was no suggestion today that this is to be tapered soon, but today's tone was more upbeat. The euro did rise on the announcement, and their bond yields firmed. In China, the Premier's annual work report to Parliament has received much coverage, but in the detail, but not in the speech, there's been much underground talk about the reimposition of capital controls to slow the outflow of foreign currency. Apparently the party has a blackout on discussing the issue. And in Australia, the government has approved a scheme where the private sector will be given access to cheap capital in return for more affordable housing. Under the plan, a federal bond aggregator will provide a long-term funding source for up to 20 years. Their current direct government efforts are considered to be significantly underperforming for the large amount of funds allocated. They're about to try something different to grow affordable supply. And in New York, the US Treasury 10-year yield is rising still and is now up to 2.59%. We also saw some meaningful rises in local wholesale rates yesterday, with the two-turn rate curve its steepest in 3 years. We may see more today. Oil prices are now down sharply again today at just under $49 for the US benchmark, while the Brent benchmark is now under $52 a barrel. That is more than a $2 drop. The weakness is due to record American crude inventories, pointing to a global glut, despite the OPEC-led supply cuts. The gold price is also now down by $2 to $1,206 an ounce. And the New Zealand dollar held its new lower level overnight at 69 US cents. On the cross rates, the Kiwi dollar is at 91.9 Aussie cents, and against the euro at 65.2 euro cents. The TWI is down to 74.9, and that is another 5-month low. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.